Do you people have a pad or something that you can write down questions as I talk?
Yep.
Because sometimes I'm in the middle of a lecture, a section of the lecture, and I have to complete the thoughts completely. So, I mean, there are going to be some questions after each period, and then at the very end, there will be all kinds of wrap-ups type of thing. Is that okay?
Yep.
Okay, anyway, if you people want, I can start the workshop right now.
Yep.
Sure.
And
Ready.
let me go ahead and actually share the screen. And can you people see the screen?
Yes.
Okay, the first thing I want to say something about the workshop and about this workshop right here. This is actually instruction, not recommendations. I am not a man with, I am not a man with clean shoes giving you advice and my opinion and what I feel. I am a Martian. I'm giving you mathematics and statistics. What I have found is those who do not understand the rationale for investment sooner or later fall for a sales pitch by somebody, okay? Like Robin Hood or day trading, people who do not really understand investment sooner or later fall for an investment advisor or somebody else, okay? There is a difference between a con man and investment advisor. If you have less than $10 million or so, okay? A con man wants to take all your money. An investment advisor limits his stake to 2% because otherwise you don't come back. In other words, they charge you 1% fee on what you have to give you advice, which is useless nowadays because the computers have outperformed human beings, okay? So trying to beat the computer with advice of a human being is like trying to outrace a train with a horse, okay? This is completely computerized, okay? Does that make sense?
Yep.
Investment advisor will charge you like about 1% for of your money for advice and all that, and then they will try to steer you into funds that have high expense ratio commissions, and a lot of the time they go as high as 1%, so that's why I came up with the 2%. So the main thing is to stay away from investment advisor and substitute for a deep understanding of the investment theory and empiricism. Does that make sense?
Yep.
Anyway, I never made a lot of money, but I made myself a millionaire, 3 times over by having read since the 1980s this book called A Random Walk Down Wall Street. And this book is in the 14th edition, and I have read every edition since then. The main purpose of this book is to look at the pitches that people have given about investment, and it has a lot of data showing which ones work and which ones do not work. So in other words, when you read this book, you immunize yourself against bullshit. Does that make sense?
Yep.
Mm-hmm.
And if you really want to be a successful investor, like I keep telling you, you have to understand investment theory. Otherwise, you will fall for an investment advisor or a pitch somewhere or something. Does that make sense? No substitute for a deep understanding of investment. It is actually not that difficult. I mean, there's some mathematical theory that's kind of complicated, but the main ideas are comprehensible to an intelligent person. Does that make sense?
Yep.
Mm-hmm.
Is that the book you and Stevie read?
What?
Stevie, did you read that book already?
Finished it.
You did?
I've read probably half of it.
Okay.
Well, the book is actually quite difficult, and some parts you're not going to understand, but it doesn't matter. Try to understand as much as possible, and I recommend that you don't read this book in one sitting.
Yeah.
You know, this is not a book for that kind of thing. This is a book that is kind of like a textbook. It's aimed at the intelligent advisor, investor. But every investment class in every university has this book uh, as a kind of a instruction thing, and you should read it like a chapter a week.
Okay.
And ideally, you want to read it with somebody and discuss it. And you can always go ahead and talk to me if you want. But don't read it in one sitting because that's not this kind of book. It's a textbook. Does that make sense?
Yeah. No,
Yeah,
very
You
much
don't
so.
do it in one, in any way. I know somebody who looked at this book and he got bored in the middle. And he said, oh, I'm going to go to the end because I just want to know what the guy's recommending. And that's totally the wrong way to look at this book. You're not, if you think that what I'm doing here is giving you a recommendation, you don't understand what I'm doing or what the book is doing. This is a book about, and the workshop about understanding how investment works. And it's not about recommendation, because then if you think of it as recommendation, then my recommendations are as good as anybody else's recommendation. And you find the people who think that what is in this book is just opinion. The guy, this is opinion. So they think that they have an opinion and they do stupid things. Your opinion is not as good as the opinion of this guy. Is that clear? No matter how bright you think you are, you're not going to really do better than this book. Anyway, I keep telling people that intelligence is bullshit. And people all the time talk about I'm not being intelligent. I hate being called intelligent. I'm disciplined. And, I'm disciplined. What you're going to hear here has nothing to do with my intelligence. It has to do with 25 years or so of work understanding all of this stuff. Intelligence without data is garbage. Does that make sense?
Yep.
So don't think that, just because you're so smart and, you are the greatest person, you prove you're the greatest doctor or the greatest engineer, it means nothing. Because in every new area, you need a lot of knowledge to know what you're talking about. So intelligence is useless. It's a little bit useful to understand books like these, but intelligence without data is not going to get you anywhere. Does that make sense?
Yep.
Mm-hmm.
That's why I'm actually recommending that you read this book once a week and all of that. Well, anyway, I want to talk about a couple of things. The first thing I want to talk is about science. Science in general is about theory and empiricism. What does that mean? You came up with a theory of quantum, a theory based on mathematics, the way nature should work, and then you have, that's a good theory, but it could be wrong. Theories could be wrong. And, about what's the theory of relativity, the theory of whatever, you come up with that theory, and you have a theory, and it could be even a good theory, but no theory is right until you prove it with experiments. Does that make sense? Today, what that means is that not experiments so much. Any theory, you have to verify it with data. If you don't have any data, okay, and why is that? Theories can be very clean and very nice, but a lot of the time they fail because the assumptions on which that theory is based are wrong or incomplete. Does that make sense?
Mm-hmm.
So people who have gone through MBAs and all that, there's a lot of theories about how to run businesses and all kinds of stuff like that, that when you look at how companies have done over the years, you find that those theories are empty. So you have the idea that you have theory and you have data. No theory is kind of that. Theory suggests what might be true, but you only know it's true when you have verified that stuff in data. Does that make sense? The main technique that one uses in investment is what is called backtesting. And what is backtesting? Well, what you do is you have a suggested way of investing and all of that, and you kind of assume that you're going to follow it 2-3 years behind you. And then you see if, you assume that you were 3 years behind you, and then you predict what's going to happen in the next few years. Does that make sense? Mm-hmm. And then you see whether the theory works. So all I'm going to show you today is being back testing. I'm going to show you theory, but the theory has also, it's kind of nice, but not only the theory is nice, but it has been back tested. Does that make sense? So you're getting here nothing like, a good story and all of that. Good stories which come from theory are not solid unless you have back testing of some kind, empirical verification of what is really going on, okay? And again, don't think that you're smart. You're not smart unless you have the theory and it has to be back testing. Otherwise, you don't trust it. Does that make sense?
Yep.
So anyway, I'm going to go ahead and right now I'm going to give you right now basically the main points that I want you people to do. First of all, you should be spending, the more you look at the market, the more money you're going to lose. Okay? The more you look at the market, the more money you're going to lose. Don't look at the market ever. People who are smart do not pick stocks, they pick algorithms. Okay, algorithms that invest and make the decisions for you. You start picking the stocks because you read in the paper and all that. Basically, you're going to lose money on the average and over the long run. Does that make sense? So I have money in different instruments. And, for example, my investments in the market are managed, I have somebody that I have which is safe. Things I pay because if the market goes to hell, I want to be able to live for 10 years. Does that make sense?
Mm-hmm.
And I'm old, so I'm 72. So I have different things. At this point in my life, I'm not trying to get richer. I'm trying not to lose my money. Does that make sense? You people can take a lot of risk because you have a lot of time, for the market to go up and down and all that. The younger one person is, the more risk they can take. As you get older, you can take less risk. And one thing that people, when you're young, you try to maximize your earnings. When you get to the age that I have, I'm trying to minimize the probability that my money will run out before I die. Does that make sense? So if you have a certain amount of money like me, have some money that is safe because I'm, completely safe, certificates and things like that, because I don't care anymore about money, my money is not a big thing. I live in a certain way that I can afford. So I don't want to put everything riskily in the market. I just want to have some time. Does that make sense?
Mm-hmm.
I'm preserving people like you, like Christine and Steve and all that. You are in the wealth accumulation point of your life, and you have to take certain risk and intelligent risk to make more money. If you don't take any risk, you don't make any money. If you put a certificate, you're going to make 1%, okay, and more. So you have to take certain risk early in life to make money. Does that make sense? But in the case when you have enough money to live, like in my case, and I'm 71, the metrics are different. Does that make sense?
Yep.
And that's one of the reasons why I was telling Steve that his picture is a little bit different from the other people because you're older, like me, okay?
Yep.
You have somewhere in between where I am with 72 and where they are with about 30. Does that make sense?
Mm-hmm.
So that's why I was wanting, I can talk to him later on your own if you have any questions, because I will tailor what I tell to people who are at your stage in life. Does that make sense? Okay, anyway, talking about what to do is kind of like over a long time. And basically, point number one, at your age, you need 6 months of money. Does that make sense? You need, the shit hit the fan and all that. You lose your job and all that. You need a prudent person has 6 months of money.
Yep.
Is that clear?
Yep.
People like Steve and I need to have a longer time horizon, but not for you, okay? Because you have a job, you can change job, you can do these. So this is only for people, you're young people. And like I said, you're going to have to modify Steve this later because I'm directing the workshop, not somebody that is like you, okay?
Yep.
So
I got it.
anyway, basically there's a place called Bankrate.com. I'm going to talk about Bankrate.com. You can find out things like what's the best credit card and, what's the best certificate of deposit. Bankrate, by the way, the reason I trust it is because that book about how to walk down the, said that they really are honest. Does that make sense?
Yep.
And there are lots of people giving you advice and all that. This thing makes his money selling this and selling that, but usually the way they sell it is they find the best credit card, for example, and then they may get a kickback. But they do find the best credit card. Does that make sense? Or the best CDs or the business. So Bankrate is a good thing to have, okay? And I trust it because I read it in that book, the book that I told you that was the Bible, that I don't want you to read in one sitting. I want you to read a chapter at a time. And if you, Steve, for example, a good thing for you to do is for you to read it with your two children and discuss it, okay?
Yeah.
That would be a family, but I don't think you can understand nobody can understand that book without talking to somebody, really understand it. It's not the kind of book you read, some kind of, it's deep. And I hope that, Alberto and Chris kind of do the same thing, study, a chapter a week or something like that, and don't read it quickly because you're not going to understand it, okay? And if you don't understand investment, you'll be cheated. If you're going to invest in the market, I invest with a Robo-Advisor that Schwab has. And the reason I use the one in Schwab is because it's cost competitive and it's convenient. At any time of the day or night, you call them and they have somebody speaks English. You don't ever find somebody who has an accent like me there. And they're very well qualified at what hour of the day or night. They also have a really good website where you can find out what's really going on. Okay, really good website, which is a convenience, the cost competitive, and they have local offices. Does that make sense?
Mm-hmm.
And now, normally you say the local offices are not so important anymore, but recently Susanna bought, a long time, a while ago, Susanna invested through them, which I don't recommend anymore, on some CDs, and they pay in a weird way. We look at what's going on, they pay one at a time, so it just went down to the office, and I talked to somebody. By the way, if you have a certain amount of money, Schwab has a contact for you. Even if you don't have anything, they have a contact, and I have a contact for years. And that contact tries to sell you things. So what you do, anytime they try to sell you something, you say no. But that advisor is pretty useful if you don't ever buy anything he tells you. They will do things like, they have some mathematical tools that will tell you, for example, what are the chances that you will have a certain accumulation for a certain age, or you will, they actually will project, simulate different histories for the market and what you're going to have and all. They have all kinds of things. They can do some life planning. Like, for example, somebody like Steve should go to one of these people and tell them, how likely are you to run out of your money? For example, if you have a certain level of expenses, how likely are you to run out of money before you die and all that? They can do all kinds of things like that, which are nice. And in the case of Susanna, there was things we didn't understand, and we didn't want to talk on the phone to somebody because we wanted to have Susanna had a piece of paper. So we walked down the street here, drove down the street, and we met with the guy in the parking lot. And, show the thing, mask and all that, and a lot of air. And we asked those questions. Asking those questions sometimes with a live person, it takes less time. Does that make sense? But I never go to the guy. I just went this time, okay?
Mhm.
You don't need to do that. Most of the time, you can do whatever you want by calling them on the phone. They're really nice. I don't need any day of the night. There are robo-advisors by companies that actually like Wealthfront. And one of the things that I will give you as homework, you people should go in and look at Wealthfront and Betterment. They have, and if I can give you, I hope we can meet again, you should explore. The robo-advisor of Schwab gives you investment advice. Does that make sense?
Mhm.
And how to invest in the markets and all that, and how to spend in the different markets, whether they're bond markets or emerging markets or all kinds of markets. Betterment and Wealthfront have expanded what they do. If you get their full service, they actually advise you whether you buy a house and what credit card, and more complete things that is actually tailored for younger people. And I would recommend that you look at those about a year from now once you understand, okay? But the main priority for you is to use a robo-advisor. And they have, the robo-advisor like Betterment and whatever, they charge you 0.25%, 0.25% of your assets under management, which is kind of high. Uh, Schwab makes their money a different way. Now, one rule about investment is that you never trust anybody until you understand very well how they make their money. Does that make sense?
Mhm.
So one friend of mine, member of the family, kind of fell for something called Acorn. Convenient on the phone and all that. He said, well, it's only charging me $1 a month. He said, nobody can make $1 a month, okay? So I asked him what's going on. It turns out that when you look at what they were doing, well, they charge you $1 a month for investing. But then I found out that they take 0.3%, 25% of your money. So if you have $100, they will take 25% of their money. And then they invest in funds where they get a kickback. In other words, they invest in a fund, an index fund, but it's one with a high expense ratio because they get a kickback. Does that make sense?
Mhm.
So until you have a full understanding of how people make their money, you don't trust anybody. You don't trust your mother, okay? Until you understand exactly how people make their money. Does that make sense? So anyway, I am a robo-advisor and never look at it. I never look what's happening there at all. I only go to the robo-advisor to take money in and out.
Ramon, do you use a robo-advisor in Schwab?
Yeah, I use Schwab Intelligent Portfolios.
Okay.
But basically, I never look what it's going because I trust mathematics. I trust the algorithms. Okay. Let me just tell you the level of what I know about these. When they came out, Schwab was a major company that came up with a robo-advisor. And I just had retired and I had time to look at this stuff and they started asking them questions. And somehow they flagged me as somebody who was likely to lead to something like Vanguard. Okay. So I was perhaps one of the few people that was contacted in person to look at the robo-advisor. Does that make sense? And not only that, but I was in contact with their mathematicians because I really wanted to, luckily I can understand mathematics very well and statistics and all that. And I had questions about the algorithms and the big data, where they were getting the data and how the algorithm, there's an algorithm that they use to diversify, to tell you what is going on, and I needed to understand it. And anyway, probably didn't need to understand as much, but I love to understand math. So I am able to understand this at the level of the mathematicians and all that, which you don't need to. Does that make sense?
Mm-hmm.
But I verify that the theory is solid, and I understand the computer. I understand the theory, which I'll tell you a little bit about the theory, but I also understand how it's implemented. What algorithms are used for that, you don't need to do that. I just like to understand things like that, because I'm a mathematician. I like stuff like that. And another reason is that I believe that if you get to my age and you don't learn something really difficult every day, you lose it. Does that make sense? So that's why I'm on top of computers, I'm on top of a lot of things, because I don't want to lose my brain. You know, the 5 things you have to do at my age to keep your brain: nutrition, exercise, good diet, basically eating well, good human relationships, which I have my wife and in my family. And the last thing, you have to do something very difficult for you every day. Okay? You can't delay the onset of dementia by about 3 years if you go ahead and work on something difficult every day. On the average, you will become demented 2 or 3 years later if you do that. Okay, so and anyway, I enjoy it anyway. So you want to invest in a robo-advisor. I never look at what it does. I just take money in and out, okay? And I do things like, have a checking account. And what I do is I have money links. So I have a checking account, which doesn't matter. You might have it in your local bank or whatever, which is convenient because you can take something, but you don't keep a lot of money there. So what you do is you create something called money links. And I recommend 3 money links: one between your checking account, one between checking account and Schwab, if that's your robo-advisor. And Schwab is a full service thing. If you ever want to do something else, and then you want to have a money link with Marcus. Because Marcus, according to GetRate, is the one that gives you the best rates on saving accounts and saving accounts and CDs, okay? And somebody like Steve should have some money on CDs, okay? They're very safe, and if you look around for who pays the most, Marcus is the best, okay? There might be on 1 week somebody, and the reason they can give you some good rates is that they have no expenses. First of all, it is by Goldman Sachs. Goldman Sachs, so it's a company that's big enough that if it ever gets into trouble, the government will rescue it or whatever. So you don't have any problem. You're not investing in some small bank somewhere. And Marcus tends to be the one that pays you the highest rates on checking, on savings accounts, and on what? And on
CDs?
huh?
CDs?
What was the word?
On CDs.
Yeah, they gave you that one. You have to have 2 things in Marcus. You have to have a savings account, and then you can buy CDs. And the reason you want to have a savings account is because you can't transfer money to a CD.
Yeah.
So you have to have a savings account that you transfer money in and out through a money link. And then once it's there, you can go ahead and leave it in a savings account, or you can go in and from there buy their CDs. Okay, Susana has some CDs within, but somehow she likes to have a little money on the savings account because in her mind, she wants to know what's going to happen. And I don't argue with my wife about things like that because the money involved is so tiny, and I don't need money anymore. I don't need money anymore. So, I'd rather go ahead and don't have any worries. For example, there are certain things in my house, like the Amazon expenses and technology, that I pay out of my own money. I could go ahead and pay with money that is both Susana and my money, but I just don't want to have any trouble. Money is not an issue for me anymore in my life, so I don't care about it. And that's one of the things that you have to learn when you get to a certain point in your life and you have enough money to live. Money should be the least important thing in your life, okay? Just want to preserve it and do well and know you're not doing redundantly. But anyway, if you want to have money links, that you have a money link between the savings account in Marcus, Schwab, okay? And
Maybe
you
I
have
have market.
a brokerage account. You have to have a brokerage account, and you have to have a robo-advisor account. And the reason you want to have the brokerage account is because the brokerage account has no constraints. So you can move in and out of there. I have a brokerage account with about $100 in it. The rest of my money is insured. Does that make sense?
Yep.
So I take money in and out, and I let the computers, and I don't look. By the way, don't look at the money in and out. Let it make the Robo-Advisor make all your buying and decisions. Anytime you make a decision, you're going to lose money. If you try to beat the computer, it's like trying to outrun a train with a horse. And now, ego investors don't do well. And what is that? Especially males, they love. How many of you have ever heard of what is called a self-serving bias? When you make a decision and it goes well, you attribute that to talent. When it doesn't go well, you attribute the problem to chance. So if you go ahead and buy stock, you buy a stock and it goes well, you say, oh, I'm clever, and did this. And the other thing is that if it goes badly, you say, well, the market went down. So you have to remember what is called a self-serving bias. Now, how many of you ever heard of what is called the hot hand? The hot hand in basketball?
Hot hand.
The hot hand. Somebody starts throwing baskets and they make 4 in a row, and they say they have a hot hand.
Like Stevie.
Huh?
Like Stevie when he plays basketball.
Hot hand is bullshit. It's been empirically, you don't have any better chance of making the basket. But the point is that a lot of people follow what is called, day trading. They buy and sell stocks. The people who do that now are computers that are very fast. Sooner or later, you lose your money on day trading. But let's suppose that you actually, a lot of people, when they do that, they have 4 weeks that they did well. They say, I got the hot hand, and I'm really running, and whatever. And that's the way they addict you, just like gambling. Whenever you're gambling, sometimes you have these things, and you remember the times you had the hot hand, or you were hot, or you were doing that, and you do that with something like Weevil and all of that, so you feel like you're a genius. You're not a genius. You're never going to go and beat the computers anymore. This investing has become being completely computerized, unless you're somebody like Carlos Saladriga, who can invest in things like initial, what is called on, what is the name of that they do? They can do, what is it that they do? They can go ahead and buy, they can do private equity, stuff like that, And there's things like Carlos, they know everybody in town. So they can buy in the local market because they have knowledge, okay? So basically, all that I'm teaching right now here is about people who have no special knowledge. If you have insider information, or you're like Carlos who knows everybody in town, he can go ahead and invest on something like, what is the name of that? Some company outside, he can go ahead and invest, and then he invests so much money that they let the books, you don't have that kind of offer. So I'm talking about people cannot go into private equity. People who don't have a lot of money should not go into private equity. Begin with, they want a lot of money. In private equity, when you invest in something like Facebook at the beginning, they want a lot of money, and they want you to be very patient with your money. That basically means you have no liquidity. This is not an option for you. There are some ways of investing in private equity for people like us, but they have such fees that you lose all your money, and they don't give you the best things. The private equity that somebody can do through this kind of expensive things are the worst thing. They don't give you ever something like a Facebook or anything like that. Does that make sense? Mm-hmm. And private equity, they say, put your money there for years. And people like us need liquidity. We need to be able to sell the market at whatever price it is at any given time. We want liquidity. Does that make sense? Especially somebody like Steve and me and you want to be able to at any time get your money. Does that make sense? Mm-hmm. That's what it's called, liquidity. Now, so you go ahead and do these. Let the Robo-Advisor do it. It's a great website. Make a decision on your own. People who think they're hot, Robo-Advisor, hot hand type of thing. Always keep, one of the things that I do, I'm extremely interested in being extremely rational. So I practice something called metacognition. I am very aware of all the biases. You know, I mean, the biases that the human mind has, okay? Like the self-serving bias. If you know the self-serving bias and something goes well, you say, am I smart or am I falling for the self-serving bias? And a lot of the time you find out you're falling. So if you know all these things in your mind, you think it can go wrong, you can strive to be extremely rational, okay? Does that make sense? You know, I don't want to be a human being. I want someday be a Martian. You know, that doesn't make errors in logic. But what I was telling you, making money links. An important thing, by the way, is to get a good credit card, believe it or not. You can find a good one in by Bankrate. Both Jose and I looked around and we find this Citi double cash card. Normally they give you $1 back, okay? This one gives you $2, okay? And
Is Bankrate a service, like, or is it free to sign up?
no, it's free, you know. But you can go there and find out which one is the best credit card or the best, who's giving you the highest rate on the savings account and all that, you know. They make their money through advertisement in the website.
Yeah.
And they may get a little kickback, but their reputation is sterling. So if they get a little kickback, they're going to get a kickback from the best, from the, does that make sense?
Yep.
Now, anyway, there's an app that you can have on your phone, which is called Mint, that I recommend people to use. It's called Mint.
Oh, yeah.
And Mint is very nice. I do it online. And Mint, what it'll do, you can put there all the money you have. You can put the bank account, your savings account, your markers, you know, whatever you have, and you have one place where you have everything. And you
said Mint?
What was that?
You said Mint?
It's called
MINT,
and I'm going to
Okay.
right?
call MINT. It's called Mint, and you can do the website, and I don't show you because if I show you, you're gonna know all the money I have. Basically, at any given time, I can go ahead and go to Mint on the phone or the computer and know exactly the money I have everywhere. Does that make sense?
Yep.
It's got the price of the value of my house. It's got what I have in my checking account, what I have in my, you know, so go ahead and actually get Mint and connect Marcus and Schwab and your checking account, saving account, everything you ever have, put it there. Okay, the credit card, the whole thing on Mint. Does that make sense?
Question, can you do transfers on Mint or it's just pure
No.
information?
You can do nothing, and you don't want them to do nothing, because you know that would be somebody else that can cheat you.
Yeah,
So
okay.
it's a picture of their portfolio is really what it is.
Yeah.
isn't it?
It's a picture of what you have,
Yeah.
and all they can do is look and give it to you. They cannot do anything. You don't want somebody else to trade on Schwab. You want to go to Schwab and trade. Does that make sense?
Yeah, perfect.
Okay, anyway, I'm going to go ahead and actually do something right now. And I'm actually going to share my phone, okay?
That day. So Mint is just where you enter in all your data, all your
Well, it's just a
assets.
way of keeping track of everything you have, okay?
Okay, so it's just and it gives you, what's that? Random.
Yeah, I saw that picture.
Yeah. You're dining
I got
in
a
the
little
snow.
folder
That's
here.
what I shared with you guys.
Yes.
Dining in the
Okay, notice
winter.
what I have here. I have Mint. I have an app for my bank, my checking account bank. The credit
Yeah.
card is Citi. Remember I told you that?
Yep.
The Amazon card is Chase, so I have that there. I have the Marcus application.
Oh, the market.
Yep.
and I got the Schwab, which I don't have, I don't ever use it. But I try to do all of these on my computer because I have more options. Okay, I think you really want to do it in your computer, in my opinion, because you have more space and all that, and
Yeah.
you can do things quick here. But when you want to really think about it, it's better to do it in a computer. But I have I have all kinds of things right there, and I have money transfer and all that. But this is I recommend that you have Mint, and I don't want to open Mint because you're gonna know how much money I have, in every little detail I have, even what I have under my mattress. But you go ahead and get yourself Mint, and by the way, Mint also gives you recommendations, and they tend to be very good. And one of the things, the recommendation for the credit card came out of Mint. Does that make sense?
Yep.
It came out of Mint, and because they have this recommendation, that's how they make their money. But they also have a reputation, so they're very much like Bankrate. But what I do is I look at what Mint says and what Bankrate has, and I see if they coincide or something. Does that make sense?
Yep.
So anyway, I'm going to go ahead and actually get rid of these. And I'm going to back to sharing. Can you see this stuff?
Yes.
Yeah.
Okay, one thing that is not really important, especially people like Christina and all of that, don't automatically buy a house. Do the mathematics. You can, there's some models online and all that tell you the cost of renting versus whatever, versus buying.
Yeah.
And people at the age of Steve, they should really own a house. But people like you, when you're thinking about the first house, go ahead and actually do some calculations. Sometimes you do really a lot better by renting, and the money you have, investing it, and then renting and all that. The only problem is that with buying is that sometimes you may not make that much money in the world, but it's very easy to be disciplined. Does that make sense? You pay your mortgage, you don't see that money, you whatever. So over time, it's very unlikely that you're going to blow the money on a trip or anything like that. So that's a safety. But what I'm saying is, for a little while, people like Christina and all of that, go ahead and spend a little bit of time looking whether it makes sense to buy or not. And if you're in a situation where renting is a lot better for 3 or 4 years, rent for a while and then buy the house. Does that make sense? Don't just automatically say, I gotta buy a house. You gotta buy a house for sure. The minute you get married and all that, you really should have a house. But the two of you are single, just look at that. And then I told you about this kind of thing, okay? Does it make sense?
Yep.
And, okay, now what I'm gonna do is I'm gonna look at investment theory. And investment theory is actually mathematical finance. Everything that I'm telling you right now can be proven as a theorem in mathematical finance. And what I have done is I look at the theorem in mathematical finance and translate them into common sense words, okay? Does that make sense? I'm getting hot here. And this is being recorded, so I'm going to go ahead and instead of taking my shirt off, I was going to do that. Actually, let me go ahead and see if I can still get the shirt.
You don't want to show off your muscles?
Yeah.
Okay, investment theory. And one should invest in well-followed markets. And what are well-followed markets? It's a market where everybody, people know everything. You know what I'm saying? For example, the New York Stock Exchange. Every stock there, there are hundreds of people, thousands of people following them. They know what is going on, I mean, the newspapers, whatever. You're never going to be cheated on a well-followed market. Does that make sense? And so if you don't have any kind of insider information, like you can invest on a local business or something. By the way, investment is different from a business. Investing, for example, in residential real estate, like apartments and all that, is not investing. It's a business because you have to repair things. Investing means that you don't do anything. Does that make sense?
Mm-hmm.
So we're talking here about investment, not business.
Okay.
And okay, and I'm going to give you a story. Right? In a well-followed markets, there are no bargains. This is actually a theorem in mathematical finance. What do I mean by that? I'm going to give you the example. Before I talk about stocks, let's suppose that you want to buy a house, and there's a house that's cheap. What do you think is going on?
It's got termites.
Huh?
It's got termites.
It's got
Something's
something
wrong with
hidden.
it.
One time, I was trying to buy a house here in Knoxville, and there was this house that was great. And, but it was cheaper than the others. And we looked around why it was cheaper. It turns out that it had a big yard in the front, and the city was planning to enlarge the street. Okay, in the housing market, realtors know everything. Now they're silly and all that. You're never going to buy a house that's a bargain. Even if you buy them in a foreclosure or anything like that, houses are worth what they're worth. Does that make sense?
Yep.
And so, by the way, and if you buy a house, like it's called a fixer-upper and all of that, you can't get fixer-uppers anymore because there are people making money buying those houses and fixing them, and they have lower repair costs. And if you start renting, unless you have a lot of houses, you have to pay for fixing. So you can't compete with people in that kind of business, renting houses. And it's a headache anyway, so don't do that, okay? Unless you want to do it, but I mean, that's a really bad, normally you don't make any money by owning rental property unless you have a lot of them that you can afford, you can afford a how do you call that, a handyman. You can't afford a handyman, the repairs will kill you. So don't ever invest in real estate unless you have lots of it, apartment building or something, which Carlos does, but it's usually a bad deal to invest in real estate. A house here and back. Okay, in well-followed market, there are no bargains. If there was a market, the expert would pick it up right away. So all of a sudden there's a stock that's cheaper than it should be. Somebody who follows the market is going to buy it. So you're never going to find that market, even if there's a little market, if there were to be a market. A passive investor will never be the first one to find such a bargain if it were to exist, which basically means that no tip is ever going to have any value. If you hear a tip from somebody, unless it's something about a local company or something, tips have no value. Buy these, buy that, means nothing. Okay, once you buy, so this basically means that you should buy the whole market.
Mm-hmm.
You should buy the whole market, which basically means that how do you buy the whole market? Because the market, for example, the United States market over the years have gone up for 7% or so. You should buy the whole large stock market in the United States. The cheapest way, perhaps the only way to buy in a whole market is through an index fund.
Mm-hmm.
So you should be buying an index fund, and when you buy index fund, you should buy the ones that have the lowest expense ratios, because you have index funds that Schwab produces and Fidelity produces. Fidelity makes a lot of money, but if you get an index fund, you buy it through Vanguard, they're gonna charge you the least amount for managing your money. So you go around and shop around for the index fund. There are, the best ones are what is called capitalization weighted. Capitalization weighted is if your index fund buys stocks in proportion to their value in the market. So let's suppose that you're getting an index fund on the S&P 500. Basically, let's say Apple is 1% of the value of the S&P 500. So they're going to give you, your index fund is going to have 1%, okay, 1% Apple. So you buy the market. The advantage of that, it has the lowest trading cost. They don't have to buy and sell a lot to do that. So they don't incur trading cost. And sometimes, let me go ahead and get this point right here. When you get an index fund, make sure you go around to the one that gives you the cheapest fees, okay? Does that make sense?
Yeah.
Traditionally, the one that gives the cheapest fees is Vanguard. But you don't want to invest in Vanguard. Schwab, when the people who tend to use Robo-Advisors tend to be extremely sophisticated people. They're not idiots. Okay? They have to be persuaded in mathematics. Robo-Advisors started in Silicon Valley. And you should think of somebody like me, with what I'm talking, I'm the dumbest guy who invests in Robo-Advisors, spend all the time understanding how they do it. So now a lot of people are getting into Robo-Advisors, but basically what is going, Schwab, when they pick an index fund, they guarantee you they're going to buy the cheapest one. Does that make sense?
Mm-hmm.
So because they know that people like me, if I look around and I find out they're giving me funds that are really expensive compared to Schwab. In fact, my portfolio for a while, that is Schwab, they actually put in my portfolio a couple of Vanguard funds because they couldn't match the cost. But in general, Schwab is a company that tries to cover the whole marketplace. So a lot of the time you find a fund that is very cheap in Vanguard, and Schwab has one that has the same ratio. Because they try to compete on every market, okay?
And in your research, you checked all the other Robo-Advisors, I assume, and this Schwab just said that was the best
did, but
option.
here was the main reason. Not only did I do that, but I had another guy who's the top data scientist at UT, and he kind of found that it was cost effective. But I told you why the Schwab Robo-Advisor is the most convenient. And there's another thing. Betterment and Wealthfront, they don't invest in their own funds. What they do is they recommend that you go in and buy a fund with a Vanguard and all of that. And I felt that would create a certain amount of my having to do things, and I don't want to do anything. Okay.
Mm-hmm.
And it's not really that competitive. You know, the Schwab one is just the most convenient one. Okay. Mm-hmm. And I encourage you people to actually go ahead and understand. And maybe someday you can give me a talk here about, about what they do, But basically they're a small company. I don't trust a small company. Okay? I don't trust a small company. I want companies like Schwab that are big enough that something, that everybody's taking is, I want a company that everybody's looking at it. And if it ever fails, it's too big to fail, the government will rescue or something, So I feel more comfortable with a big company. That's my whatever. You may not be the right thing to do, but they're cost effective and they're convenient, okay? And certainly later, when you people know more, you might go ahead and actually investigate that and move somewhere but you have done a lot of research to do that. Schwab is a good starting place and a good parking place for somebody like me and Steve, the father.
Got it.
Anyway,
Ramon, question. What's the market like now for expense ratios? What would be a a typical or a low expense ratio versus a high expense ratio? What do you?
I don't know.
No. Okay.
Anyway, the price to earning ratio is an old-fashioned measure.
No,
It's
no,
an old
not the
man,
price.
because
Not
it
the
only
price. I'm
looks
just
at-
talking about the expense ratio.
Oh, I'm sorry, I didn't understand.
Not price earnings ratio. No, I'm talking about expense ratio.
If you buy an index fund of the American whole market, you talk about expense ratio 0.05%. Nothing. And the reason is that that all is done by computers, and they're large markets, so is easy to buy and sell. So they have
So
no
that's-
cost.
So
Now,
a half a percent,
Huh?
1/2%,
No, less than that. 0.05%.
0.05.
Nothing. Now, sometimes you invest in things with higher expense ratios. You should have a part of your portfolio in something called emerging market or in smaller stocks. In those markets, it's harder to buy and sell. So they tend to have larger expense ratios. Is that clear? So
And the robo-advisors, can you tell like Mark that you want them to do in emerging markets or?
what? No, that's all done by the computers.
Okay.
The
So
computer will
they'll,
tell you, and what I'm going to do, I'm going to jump ahead, and I'm going to jump ahead here for a minute, and I'm going to show you my portfolio. Okay, at least the way it was 5 years ago. Okay. Now, REIT is real estate investment companies. Basically, companies invest in real estate. And look at what is going on. It actually bought a couple of Vanguard funds. You see that? I sent you people a white paper that I think you all have the white paper, don't you?
yeah.
No.
Oh,
The one that is actually the white paper for Schwab. Okay, anyway, this is what it does, but look at this, what is going on here, okay? And I want to jump a little, something like the gold is hard to trade, so the expense ratio is higher. You see that? But you get something like buying in real estate companies, doesn't cost it. REIT is a real estate investment trust. The expense ratio is nothing. And look at this one right here, investing in international stocks. And, big companies, nothing ratio. You see that? The ones that I want to talk, and I want to jump around, because I'm going to jump around. Schwab does something that it has some funds that are not capitalization weighted, but value weighted. Now, the value weighted funds, what they do, they don't weight what they buy strictly by capitalization. They weight them by some fundamental measures, like price to earn ratios, but they use instead not only price to earning ratio, but they use cash flow, and they cash book value and all of that. And based upon that information, they buy a little bit less Apple, and they buy something. Now, those funds make some sense if you believe that value stocks outperform growth stocks over the long term. Does that make sense? Over the years, stocks with low price to earning ratios have done well, okay? Better than the other. It has not been so in the last 10 years. Okay? But it is reasonable to have a fund that is value weighted. All the other funds you can compare to other people, so you get the cheapest expense ratio. This one right here are Schwab ones, and you cannot compare with others, so they're making some money here. Notice the expense ratios are higher, and Schwab is making some money there. A little bit on all the other funds, but not that much, but they're making money there. Does that make sense? Anyway, you have no choice. And when you factor how much money they're making here and they're making there, they're just competitive with Wealthfront and Betterment. Okay, but there's another way that Schwab is making some money. Where in the portfolio they choose, they keep a certain amount of it in cash. See that? And that cash is invested in the Schwab bank. And what do you think you're getting out of that money? How much is it's an account on the bank making right now? 0.0?
Yeah, not much.
0.03.
Well, you put that money in the Schwab bank, and they don't pay 10% of my money, but if you're younger, it would be something like 7% of their money, and they pay you what a bank pays. Now, in my case, I like that because you can take money in and out of that to the checking account and all of that. So there's a benefit in having a little bit of cash there.
You treated it, okay. Interesting.
So, you know, I basically when I have a saving account and I get above a certain value, I transfer money here. If all of a sudden I want to, you know, I don't have enough money in the cashing account, take it out, and I always have some cash, so I can just transfer it in and out of that, okay? So it's not that much of a deal to have that cash. And they have to make money somehow. Does that make sense?
Mm-hmm.
So anyway, let's go back to the general, the workshop. So you want, it might make some sense to have a little bit of weight in money on a value index, in a value index fund. And because if you believe that long term, and it has happened, if you look at what happened in the market for the last 120 years, value stocks have done better because people go crazy, like people go crazy buying Tesla and all of that. You know, there's stocks like that are hot like that.
Yeah.
By the way, growth stock is one that has a very large price to earning ratio, but people like Amazon, but you think they're going to grow so much and sooner or later you're going to make, your stock is going to go up and all of that. They pay no dividends, they pay nothing, okay?
Yeah.
So anyway, then you should diversify. You should diversify to reduce risk.
I have a question.
Yes.
So Stevie and I bought stocks thinking we were clever through TD Ameritrade, like individual stocks, just random companies, you know, Apple, Disney, whatever. Should we withdraw that and sell those shares and just put this into money towards Robo-Advisors instead, or?
Of course, you should not have any money like that.
So just sell it already, like sell those shares.
And put it on the Schwab Intelligent Portfolio or something else.
Okay.
And let me just tell you, I want you to understand something. This is called the only free lunch in investment. It's called what is called the, what is it called? Let me just go to call about modern portfolio theory.
There we go.
You know about that?
One cannot find low correlation asset classes.
Okay, I'm going to ask every one of you to explain this back to me after I explain it, because if you don't understand this, you're going to be cheated sooner or later.
I actually understood that.
Okay, but I don't really know. I mean, because there are people, my psychiatrist, I gave it this talk and then he fell for an investment advisor. People who do not understand investment at this level, sooner or later get cheated. Oh, it's a friend of the family. You know, the guys really know, they give us a good look talk. You know, I mean, he's got this system that beats the market over the last 20 years. And there's a lot of strategies that do meet the market, but that doesn't, you know, because if there are millions of strategies, one of them is going to do well, no, by chance, you know? So they try to sell you on that, but that doesn't have, you know, past performance, does not predict future performance.
Mm-hmm.
By the way, one of the things that I tell you, by the way, I told you that Well, here's this theorem, and I'm going to ask each one of you to explain this to me. Okay, and I'm going to take a little break here.
This is a quiz? A pop quiz?
There's going to be a question.
Already.
Jesus! Explain the chart first before you quiz me. Well, Alberto, you can explain it.
Yeah, you took the class.
I can actually.
Technically.
Risk and return. High risk, high return.
Mm-hmm.
So if
Anyway,
you're,
I want you
Stay
to
on the curve.
on the high risk but on the low return, you're an idiot because you're having a lot of risk with no return. But if
Yeah.
so, basically on top of that line,
Stay on the curve.
black line.
Okay,
on,
here's
right,
what
on top of the curve, you're a smart person. On below the curve, you're an idiot.
Okay.
Okay, well, anyway, it's very difficult. Risk is measured by variability. And basically what it means, you get a CD, how much that your investment value fluctuates? Zero, no? You get your money.
Mm-hmm.
So that's what is called a very low risk investment. A savings account goes up a little bit and all of that, that's a little bit more risk. And one thing you need to understand is that if you want to make money, you have to take some risk. Like the stock market, there's risk that'll go down or up, okay?
Mhm.
So, but you have to take risk smartly and not unnecessarily. Does that make sense?
Mm-hmm.
You have to take some risk, by the way, which the level of risk that you should be taking according to your age is going to be determined by Schwab Intelligent Portfolio based on some model of risk. They're going to tell you when do you need the money, how much risk are you willing to risk losing 10% or 20%. It's going to tell you, depending on your age and all that, it's going to tell you how much risk you can take. You don't have to say, so they're going to give you the risk level for you, okay? Does that make sense? But anyway, what I want you to understand here is the following. This right here represents on the right color. This right here represents a portfolio. For now, it's a portfolio of index funds. Remember that index funds? There are different index funds depending on the markets. There's index funds for emerging markets in European stocks, bonds, real estate investment companies, and all that. You have to invest in multiple sectors. Schwab Intelligent Portfolio will pick something like 24 market sectors that you should invest. Now, in the old days, when Steve and I were right, you could diversify properly with about 5, 6 different market sectors. But over time, different markets have become more correlated. They tend to go together more. So to get a proper diversification, you have to invest in more investment sectors. Does that make sense? So this is a portfolio. The portfolio I showed you a little while ago. Here's the portfolio that I had. Remember that?
No.
Yeah, it basically got a little bit on global, a little bit on what is the name of that? A little bit on global, a little bit on real estate, a little bit in Europe. And now let me go ahead and just jump around before I go into that to show you something called, I'm going to show you something called, how many of you have ever heard of something called the investment periodic table?
I think just from your last class that I watched.
Okay, investment periodic table. I'm going to go ahead and stop the stop sharing right here. And what I'm going to do is have to find what I have.
Alberto, where are you?
Okay, can you people see that? Okay, this is what is called an investment periodic table.
Yep.
And it's very important to understand that. Let me see if I can find one that goes big, okay?
You can save the image if you want and then just open the image.
I was trying to avoid that, but trying to do that, okay? But the point that I want to tell you is that each color represents a different market segment.
Mhm.
And very seldom is the same one on top, okay?
Okay, so the ones on the top are the highest returns, I guess, for that year?
Yeah, the
Is what
one
you're
on top has
Okay.
the highest return that year, okay?
saying? Okay.
Which
So
has never
basically the big
been
deal about
successful.
here is that you
Yeah.
have to invest in different things because they never
Yeah.
go. And there are a lot of people at the old days that used to pick stocks by using something called Morningstar, and they look at 5-star funds, and they got 5 actually. But the reason they did well is because all those 5 funds invested in the same thing that went up that year. So when you bought all of them, you ended up not diversified properly. Does that make sense?
So it's a case for diversification.
It's part of the case for diversification. But the good thing about the market for diversification is that you can calculate the diversification mathematically by using modern portfolio theory. Okay? And let me tell you about modern portfolio theory. This couldn't be done. The theory was in the 1956, but you couldn't really do it because you didn't have the computers.
Mm-hmm.
You didn't have the data. Now they have the value of stocks around the world every second or every minute. Does that make sense?
Mm-hmm.
And you say, no, every market, they have data on every market. So that basically means they have correlations. And now, one thing that is very important about this kind of thing, performance doesn't persist, but correlations do. What do I mean by that? If you look at real estate over time and stocks, the correlation in their performance, the way they're related, tends to stay over time. So you can't predict performance, but you can, you can count on the correlations in the past. Everybody understand what correlation means? Christina, you're not a mathematician type of person. It's a measure of how to get it. If you have, let's say, let me give you an example of correlations. Let's suppose that you are in a beach somewhere, and you start selling umbrellas and suntan lotion. Well, you tend to sell suntan lotion when there is what? When there's a lot of sun. And umbrellas when there is a lot of rain. And they don't happen at the same time. So that those two funds are not very highly correlated. They don't behave the same. Does that make sense?
Yep.
But if you invest, let's say, in American large stocks and European large stocks, they're so global that the way American stocks tend to go is very close to what European stocks do. And that's what it's called a high correlation stock. The least correlated markets are, the better for diversification. Clearly, if you can sell umbrellas and shelter lotion, you're fully diversified. But it's very hard to do that because things tend to be correlated. And that's why Schwab invests in something like 20 markets, 25 markets or so, okay?
No.
Does that make sense?
Yeah.
So anyway, I want you to understand these, and I want you to understand these. If you have a portfolio, this axis right here is risk. I mean, how much variability you expect. And this one, how much you expect to merit. You might expect to make here, let's say 5% annually or something. Now, if you're here, you have this portfolio, you're not very bright. And the old days, if you buy stocks in your own, you're going to be doing that. Christina, to answer your question, because you don't have an algorithm to do whatever. So you do that on your own, and you're going to take more risk than you need. First of all, you cannot diversify. Buying individual stocks, none of us is rich enough to diversify by buying individual stocks. You have to buy index funds. Carlos diversifies by buying stocks individually. But to be able to diversify with individual stocks, you got to have infinite money. Does that make sense?
Yeah.
So anyway, you're here. And so basically it's represent that you have a fund. You know, the yellow one might be emerging markets. This may be gold and precious metal. I mean, you know, American market. This could be European stocks and all that, okay? That would be the 25 or so markets. If you want to take a given level of risk, let's suppose that you want to take this, you want to make, let's say, you want to have this, you want to have this expected return. And you're here, what should you do? Well, you can get the same expected return taking less risk. Isn't that right?
Mm-hmm.
So why take more risk? You can reduce the variability and the risk you have by going to the left. Is that clear? If you are, on the other hand, you know, have a certain tolerance for risk, so you want to tolerance for risk, you really tolerate only this amount of risk. Well, if you're here, you're done. Because you can get the same risk and make more. So that basically means no matter what portfolio you have, you should always invest in the, you know, in the what is called the efficient frontier. Does that make sense? And no human being can do that. That's why you need a Robo-Advisor. Robo-Advisors are using an algorithm which is called full-scale optimization using the correlations, and they come up with this that I showed you a minute ago. And that's based on creating what is called the efficient frontier. All of the stocks in an efficient frontier. So that's why you should use, that's the main reason you should get the a Robo-Advisor, because nobody can do that by hand. Invest in the investment frontier. Does that make sense? So that in a nutshell is why you should do that. There's another reason to invest in a Robo-Advisor. And that is the following question. And I'm going to stop sharing the screen now. So can people understand? Did I do a good job in understanding, you people understanding this this graph?
Roman, I had a question for you. I think a lot of young people are have a difficult time understanding what level of risk they really
Well,
have.
we'll calculate that for you.
Right. So through a series of questions and your age and all that kind of stuff, that they should be able to determine your risk adverse and how much risk you're willing to take, right?
Yeah, that would be the last thing to do that we'll do today. Pretend that we're offering an account. So you see what's happening, okay?
Okay.
So anyway, how many of you have heard what is called tax harvesting? Anybody heard of word tax
I
harvesting?
the last class that I watched, but.
Well, I'm impressed that you understand. Well, tax harvesting is the following. Let's suppose you have a stock and it loses money that year. You can sell it and then take a lot, the two that you used to have for your taxes.
Yep.
And then you can go ahead and buy a similar stock. If your stock was, let's say, in computers, you can buy another computer company or something, okay? And then get the tax loss, and you're still diversified similar. Every one of the funds that Schwab has a mirror fund that does the same thing.
Mm-hmm.
So if you lose money, if the fund loses money that year, they sell it, get a tax loss, and then they buy the mirror fund. They do that. Of course, this is only valid if you have money in a taxable account. If you have an IRA, does that make sense? Tax advantage account, it doesn't make any sense to do that, okay?
You said it's only in an IRA account.
No, the other way around. In an IRA account, you don't pay any taxes.
Oh.
Right.
They buy and sell and all. Basically, there are two types of IRAs. Some of them are called traditional, where let's say that you, I think today you can say you're making $100,000. And today you can put $6,000 in an IRA. Well, then you pay taxes only in $94,000. And of course, you have to take that money out someday, which you can do only after 55. And then you're going to have to pay taxes, but hopefully you're going to pay taxes when you're in a lower tax bracket. And you accumulate the money and all of that. For a little while, I didn't retire, and I was paying a 12% tax bracket. Because, I didn't make any, basically I stopped working at 65. I did retire, but I didn't get my money until 70. So there was about 5 years, 5 years I didn't make any money. I live out of savings. So according to IRS, I was making no money. But when you defer retiring to 70, that's equivalent to having an annuity that makes 8%. So if you can't afford it, you should live out of savings and retire at 70, okay? Does that make sense? Well, anyway, what I'm trying to tell you, this doesn't make any sense. But now that we're talking about, a young person should invest in the following order. And you should invest in the following order. You should invest about 16% of your money. That's a rule of thumb. You should invest and have it automatically deducted from your paycheck, and the rest of the money, leave it up. Those people who are always worrying about this is cheaper and all that, they go crazy. So you just get 16%, and the rest of the money, you blow it, okay? You want to buy a car, buy the best car you like, as long as you keep, don't start going, I buy on Amazon even though I may get it cheaper. Live it up. Don't try to spend money on not getting a latex or anything like that, because your life is going to be less enjoyable than it could be. Just spend 60% of your money. You have a 401k?
Yes.
But 401k, make sure that you invest to the highest level that the company matches.
Yep. I do that.
If you have any extra money, don't put it on the 401k.
Don't. Okay.
401k, you don't have a lot of options to invest. Like you cannot put it in a Robo-Advisor.
Got it. Yeah, I just do the
and there's a trick.
6%.
And the companies do not have a fiduciary responsibility to pick you the best company. For example, Delta has Fidelity, and they're expensive.
Ours is Fidelity too, but I have no option. That's what NBC does.
Well, but I'm saying, but if they give you a bunch of options, but within Fidelity, you can buy low-cost funds. You know, they give you a bunch of options, but if you're going to do that, make sure you get the index funds, okay?
Yeah.
So those days, so Fidelity is going to suggest a lot of crap that is expense funds that you don't do. Just pick, I done that for people, and you pick the index funds and stay with that, okay?
Okay.
But Fidelity is not a good company. And I don't want to talk about that, but another day I can do that. They have a lot of tricks that I don't want to digress on that.
Yeah.
If you have extra money, put it in an IRA. Use a traditional one, unless you have a lot of money, and then put it on a lot of money. You're making so much money, you don't know what to do with it. Then you use a Roth.
One day.
You use a Roth. But normal people, you people that I know what you have, put it in a traditional IRS.
Oh, right.
Roth is a type of, you don't even look at that, okay? And if you have any money left after the 401k, you go back to the 401k, if they let you. And if you have extra money, put it in a taxable account. Of course, it's under the assumption that you have six months of money, that you for sure. Does that make sense?
Yeah.
So anyway, so are there any questions on what I have done so far?
So Schwab and TD, I think, or Schwab acquired TD, no?
Yeah.
Recently? Does that affect any of this, or
No.
does it matter? Okay.
Schwab just want to be a full service company. And I think it was Ameritrade or somewhere. And it's a company.
It was Ameritrade, yeah.
It has a different market, mass market, and people want to invest on their own and all that. You don't worry about it, okay? You can buy anything on Schwab.
Got it.
Okay, but you're going to buy only what? The Schwab Intelligent Portfolio.
Yeah.
You're not going to screw around with anything else.
Yeah.
Now, what I'm going to
The
do...
most basic level one, right? Not the premium or anything like that. Just...
Well, the premium is going to give you, he's going to charge you for an investment advisor. And you know the investment advisor is not going to do anything for
Yep.
you. So the premium is people who are, people the age of Steve
Old.
or me.
No.
People like me hate the new, unless you work really hard. So they like to have a human being to talk and all that. That was my...
Yeah.
Like that.
We like that.
You're young enough that you're not stupid. I read a course. Remember, people my age, unless they work at it, they look at a remote control and they freak out. So you talk about the people I know my age, almost none of them can handle a computer. They can do what I'm doing with the technology. They don't do that because I work really hard on not getting there.
Yeah.
But the majority of people just get stupid. They don't want to try. You tell them, well, you can do better with this.
Yeah.
And they say, well, I'm happy with what I got. I'm happy with my advisor. I'm happy with this. And they don't want to change. People that are young do not want to change. Now, I read an article on what young people are doing in investment.
Yeah.
Basically, young people are losing money left and right.
Because they're not investing, or they're investing wrong?
They're losing money like crazy because they're falling in for these apps on the phones and all that.
Oh,
like Robin
yeah.
Like the
Hood.
Acorns and the Robin.
Got it.
All the shit that they get them into,
Yeah.
day trading and this and that, and they have hidden fees, and they're doing all kinds of things. But I wanted to know what they were doing smart, and I found out that young people are really smart in a couple of things. They do know how to use things like Zillow, and they know how to transfer money. They don't use checks and all that. As far as payments and all that, they're pretty smart.
Mm-hmm.
And young people are going in droves towards Robo-Advisor, while senior people are staying away from them because they don't want anything new, I have found out that when I talk to a person that's 60 or over, and I tell them all this stuff, they say yes, 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 and then they go back to the investment advisor. I want to think
Oh,
about
shit. Was that comment for me?
it. I'm hoping you're listening to these,
Yes, I am.
so that, and I know you over the years, and you tend to be fairly open.
I think so.
The only thing that can fuck your mind up, Steve,
Uh-oh, here it is.
if you start
It's Dora.
What was that? Dora?
competing with me, you see this stuff and you need to show me that you're smart as I am, which you are, but not in this. I work with
Okay.
okay,
That's why I'm listening. That's why I'm listening, Ramon.
you're not going to be smarter than I am in this unless you do spend the time that invest 25 years understanding this stuff. Okay, I was doing this Robo-Advisor here 25 years ago, except that I have a human being doing it. Okay, statistician finding the way to diversify. Well,
All right.
a lot of people that I know about my age, when I talk to them about that, they really hate because they see the person who teaches as being above in the pecking order and the person who learns.
Mm.
Okay, so if you get into that kind of thing, here I am talking, and you're maybe inside your brain going to say, well, Ramon thinks, I'm like Ramon, and I'm the equal of Ramon. So Ramon is saying this kind of stuff, and I've been learning from Ramon, so I got to teach Ramon something, or something like that, some kind of all people men, But the reason I had some reservations of having you in this class is because the dynamics that I have with young people is that of a professor. The dynamics I have with somebody that's 62 is not of a professor, it's that of a peer. So that creates a barrier to learning.
Mm. Okay.
So I hope you look inside your heart to keep those kind of emotions that old people have from you, like be willing to change and all of that. And that's why I'm going to have a follow-up session with you.
Oh, no, I'm in trouble.
No, I'm going to have a follow-up session with you, in which I'm not going to say anything.
I think I have a pretty open mind, and I obviously took a lot of notes, so I'm always open to learning.
What I'm saying, I still think you're 62. So I want to talk to you privately, and I'm not going to lecture. I'm going to listen to what you want to do, and what you think you want to do, and then you're going to bounce it back at me, and I'm going to make commentaries. That's the
Okay.
way you talk to
I
somebody.
look forward to it.
What?
I look forward to it.
No fair.
Okay, that's a different kind of thing. But what I'm going to do right now is I'm going to get rid of these, and I'm going to open a Schwab account.
Yes.
What are you eating, Alberto?
I don't know, but he has ice cream or something.
Looks really good.
If you people want to,
Wait, give me one record.
here's the following. You people want to, if you want people to meet like every week or so, I can give you I gave you a broad overview of investment, what you need to do to be intelligent. But there are other things that I can teach you about, like what is called risk and all that. If you people want to do, I can follow these with other classes. Okay. I have a habit when I want to understand something, I prepare a class. Okay. And so I have a series of PowerPoints on different aspects of investment, which I never, I only gave it to one person. But when I want to really understand something, I prepare a class. And I can share that class, okay? If you want to know about the areas of investment and all that, you want to know about more about portfolio theory, here, there are things like kind of you don't need to know, but I mean, turns out that if you have a gold fund and a large stock fund, if you diversify properly, you can do better than either one individually. So diversification not only controls risk, but you can enhance performance. Those are sophisticated things that I can teach you later. If people wanted to, if you want to do that, I don't want to organize it. Christina, you want to have a follow-up class, you take care of organizing it.
Okay.
Tell me when you want it.
Yep.
Anyway.
And Alberto will bring the food.
Mm.
These are frappe of
Frappe.
what?
Can people see the screen?
Snickers.
Yes, we can see it.
Okay, I'm going to go and say Schwab. Intelligent portfolio, okay? Does that make sense? I'm going to go there. And I'm going to go say open an account.
Okay.
And you're going to do that according to your own questions. And you are going to do that on your own. But basically opening an account takes 15 minutes.
Cool.
And then all you need to do is mail them a check. Or if you're sophisticated, you're going to create a money link between Schwab and your bank or whatever. Or you might be able to get it. If you have money on Vanguard or something, get yourself a money link between Vanguard and or whatever. So you can transfer money. So you're going to mail them a check, or if you're a young person, you know how to do things like money links, okay? Okay, invest for future goals. That's what we're going to do, no? Okay, now there's going to be a bunch of questions because they don't want to have investors that are pain in the ass. They don't want to have people that will call them on the phone a lot, and if the market goes down, they sell and all that. They don't want people like that. Does that make sense?
Yeah.
So young people want to build long-term wealth. Is that correct?
I would hope so.
Yes.
Okay. What is your understanding of stock, bonds, and ETFs? You say none, they won't take you.
Oh, okay.
But
Oh, shit.
if you actually understood what I said and listened to the recording, you understand this better than most people. You don't understand mechanisms of the different types of index funds and all that, but you kind of have a big picture. And if you take further classes with me, I will explain the different kinds of ETFs, different investment theories. I really hope that the three of you, Steve and whatever, and you actually do have a book club and study that book, Random Walk.
Okay.
Over a period of 6 months. And I hope that you do that. People who do not take the trouble of understanding sooner or later get cheated by a smooth talking salesman. Okay, so we're gonna say good, okay?
Okay.
Okay, when I hear the word risk, I understand that it's inherent part of the investment process.
Okay.
You don't want to take any risk, you're going to make 1%, if any, if that. But over the years, if you have a lot of years, the market evens up, So people like Young can go ahead and take a lot of risk because you have a long investment return. Have you ever experienced a 20% loss? Well, you haven't, but I did. But
Oh,
you say no, but I'm going to say yes.
okay.
Because it happened in 2008, okay? Some people lost 40% of their money, okay?
Mm-hmm.
But here's a big question. What do you, if you say you did something, they won't take you. You say did nothing, like I did.
Mm.
Okay.
They won't take you if you say did nothing?
No, if you did nothing, they'll take you. But if you're the kind of person who sold everything or whatever,
Oh, okay.
you know, they want somebody who knows that could happen and you don't do anything. They don't want people who start buying and selling on the news, you know, COVID-19 came along and you want to sell and all that. They don't want people like that.
Right, okay.
Okay? Now, people like me do a fairly good level of thinking. What I do is I don't understand individual stocks, but I read articles on what is called, for example, the world economy and things like that. For example, I understand that large companies are likely to survive for 10 years with the coronavirus. A lot of them are making money. So I know that I shouldn't run out of it. I do some very high level understanding of macroeconomics and all of that I do through the, you know, but you don't need to know any of that. It's just I have a lot of time. So they want you to do nothing, okay? Do you make decisions? Well, they don't want somebody who just, oh, did I do that? You make a decision and you just figure, you make a decision confidently. When you do this kind of stuff, you don't spend a week thinking, oh, why don't you go to Vanguard? You go, they don't want you people like that because they're pain in the ass and they lose money with you. Okay, the minimum amount that you can invest is $5,000.
Okay.
Minimum.
Okay.
Should you do 5,000 or should you do more if you can?
You can do the bank as long as you have six months saved somewhere secure.
Yeah, but they won't like flag you as questionable if you're just doing the bare minimum.
No, and you might want to do that for a while to learn.
I mean, I can probably only do the bare minimum, but I just want to make sure it's not like.
I would go ahead and put all your money there.
All my money. Hold on.
Christina likes money.
I can barely make the minimum.
Be bold, Christina. Be bold.
I need a few months to make the minimum.
Well, I'm talking about the following thing. You know, all the money that you're willing to invest, you should put it here.
That's good.
Now, of course, you should have a 7. You know, I mean, depending on how you are, you should have a 6 month. You know, whatever. Alberto is in the airlines. You know, so you might want to have a year. But he's married, so he can take a little bit more risk. He has some savings. You know, how much money you need to do is a personal decision.
Okay.
My wife is very risk averse. So she has far more money than she needs on CDs and things like that, and I don't argue. Because my metric is not having any problem with my wife, not making money.
That's Steve metric as well.
It is. I don't do so well at that sometimes.
Okay, anyway, you're going to invest, but they want to know how much you're going to tolerate. If you freak out, if you lose 10% of your money, well, that's you're going to do that. But if you are like you say, well, I'm not going to freak out if I make 25% and lose 15%. Somebody your age, I would start there. And learn later if you want to take more risk or not, but over time, okay? Very good. You can change this anytime and they will rebalance.
Oh.
You know, anytime you can come here and do that, and the algorithm will figure out a portfolio for you. How much you going to put every month? Let's say you're spending every month $500. It doesn't matter, okay? You can put 0 there. How old are you, Christina?
I'm 30.
30. So let's say that you have 35 years before you need the money.
What?
35 years? God, I got a long time.
Well, you're investing for retirement and all that long-term wealth.
That's right.
5. Got it. Making a note.
Okay, yeah, you might decide to change that a little bit because you might want to buy a house. But if you buy a house, then you can take it out. But I mean, ideally, you want to invest for retirement. Okay, if you have children,
Each month?
you may want to invest for when you have to go send them to college, okay?
Can you put the question under how much do you want to contribute each month? Can you put 0 for the first,
Yeah.
like just for the application and just put the 5,000 and then go from there into.
Well, you can put whatever. If you have you have children to send to college, and you're young, and you may want to put that 20 years.
Okay.
I don't think that you're obligating yourself to put 500. It's just
Oh, okay. It's
Yeah.
this is just a
An
screening.
estimate. Mhm.
This is just a screening to whether you're going to get through the gate.
Okay, yeah, that's why I was.
Yeah, I think that's why you're asking the question, right?
That's
Okay, you
a
want to put that
that's a
children?
calculator, and that's a
You put whatever
calculator.
you want
And
there,
they give you
calculated. The only thing you have to be
Or you-
sure is that you put more than 5,000.
Yeah.
Yeah, that's true.
And you don't take a premium on anything, you know? Is it going to be a taxable account? You're going to, I'm going to assume that this is in an IRA.
Okay.
If you want to go ahead and you have more money, then you have to open another Schwab Intelligent Portfolio. I have I have 3 of these accounts. One for me, one for Susanna, and one jointly. Does that make sense?
Mm-hmm.
I have mirror brokerage accounts with $100 each, one jointly, one for Susanna, and in case I want to take money out of there or I want to buy something, I have $100 ones with that, and basically that's all I have. Oh, and I also have a taxable account, brokerage, and another one. The reason I have a taxable account for Susanna, taxable account for me, and a taxable jointly. And that's where, when I have money like, I want to move money around from my checking account, expenses, I want to buy a car, whatever, I put it there. Does that make sense?
Mm-hmm.
So you people might want to have, Christina, you probably want to open a Schwab Intelligent Portfolio account for retirement, and maybe another one, no matter how small, for putting money down that you might want to take, whatever,
Make 2 separate accounts?
Yeah, one to the IRA, and then do another one for whatever you want to do. Okay? Taxable,
Well, yeah, the other one just serves like as a bank account, is what you're saying.
Exactly.
yeah,
The taxable one?
Yeah, it's just like a bank account, Christina. You do one for the retirement, long term, and then one for.
Well,
Like
just open
bank
with $100. It gives you options.
Yeah.
Now, what I find out is that I don't use it very much. Now I have to leave money because I don't make any money, so I have that. But you people don't want to use that anymore because I told you that you can transfer money out of your bank account and the Schwab Intelligent Portfolio by taking that 10% or 6% that you have in cash.
The tax advantage one you can't take out at any time without being like penalized.
That's right. You have to be 55
You have to be 55.
to be able to take it out. Otherwise, you have to pay a 10%. A penalty, which you don't want to do, which is okay. If you have a problem, you can do that. You can take it out also if you are sick or something. But Christina, you should talk to your father about that, how much you want to have, whatever. Talk to your father, but I would go ahead and have, like I said, 401k, max that out until match, IRA, and then leave some money out.
Yeah.
Some of that 6-month thing that you have, you might want to have a little bit of that in the cashable account and another one in the savings account. It depends what you want to do, okay? But you should open 2, one for tax advantage IRA, that kind of thing, and the other one for
are both minimum 5,000, so basically it will be a $10,000 basically account.
what?
Is each account $5,000 minimum?
Either one is account 5,000.
either one. So one of them has to be 5,000, then the other one can have $100 or something like that.
No. The brokerage account, no. I'm talking about if I were you, I would have 3 accounts. And they are called SIC, Schwab Intelligent Portfolio, that is tax deferred, the IRA. I would have a taxable account. No, at your level, I wouldn't even have that. I only have the tax deferred, okay? And I would only have the tax deferred SIA. If you have money, then have a taxable SIA. I mean SIP. And then if you want to, don't do that now. You can have a brokerage of $100 to have maximum flexibility, okay? And in a brokerage, there are no minimums. So to answer your question, you have a tax deferred SIP. If you want to have some cash, have a taxable SIP, and get a brokerage to have maximum freedom, because you cannot do anything inside and I never use the brokerage. I just have it there in case one day I want to do something, okay? Was I clear on that? So let's take it as a tax advantage account, okay? And this is your portfolio, okay? The different segments are different. He's going to tell you put 64% in stocks, 25 in fixed, and that's quite high. But it's probably because of COVID. You know, if there had not been any COVID, it would be like 15% or 10%.
Yeah.
And the algorithms are adjusting that we're at a period in time that there's a lot of risk out there.
Mm-hmm.
Does that make sense?
Yep.
So, I mean, you know, I did this a long time ago before COVID, and they put you a lot more in stocks, okay?
Yep.
They say put 2% in commodities.
How many years have you been doing this? Like with the Robo-Advisors in this one?
Well, I've been doing this in a Robo-Advisor for maybe more than 25 years.
Oh, wow.
But this was only available 5 years ago.
Okay.
But let me tell you how I did it, if I want to tell you how I did it in the old days. In the old days, what I would do, there was a magazine called Forbes.
Yeah.
Forbes would have a rating of new investment newsletters.
Mm-hmm.
There's all kinds of people who sell newsletters that give advice on how to invest. You don't have to do that, but this is the way an old-timer did it. Then I picked a newsletter that was cheap and did well in 3 up markets and 3 down markets. That's how for this, okay?
Mm-hmm.
Then I got one of those that was about $200. And the guy who sold the newsletter was a statistician. And that statistician had access to Morningstar. Morningstar has information about every fund there is available out there. Mm-hmm. But if a normal person tries to go to Morningstar, they go crazy. And this guy, statistician, would tell me about 8 funds to invest. And that was my Robo-Advisor. It was a human being doing it. And there was a period around the 2000 when the American market went nowhere. But the Morgan markets did really well. So I was diversifying very early on, and that's why I never made a lot of money, but I basically have $3 million to $3 million net worth. And, you know, I did it, you know, making a professor's salary because I knew what I was doing, you know. When I got my PhD, I spent a year or so screwing around with Chrysler and buying stocks like you are. And then, you know, it didn't go well. You know, I saw Lee Iacocca come up with a car, I invested in Chrysler, and then when, I did all that stuff. And then I say, hey, I got a PhD, and I learn. I can study. The way I study mathematics, I can study investment. So I found this book, and I started studying, but I was doing that. Basically, I was using a Robo-Advisor for years.
Mm-hmm.
Okay, and for a little while, I had a guy giving me advice, and the reason was that I wouldn't change things around that often, and Susanna was driving me crazy. So the fact that she was driving me crazy, I got some guy who was charging me 0.5% of my money and learning on, and I found out he was putting me in expensive funds and all of that. But the point is that at that time, I was depressed and all of that. I didn't really want to change things. So I did that for a little while because of my wife bugging me, and I went back to the Robo-Advisors, okay? But anyway, that's life. Anyway, let's take a look at what's going on there. This is what I told you to do, okay? Large stocks, 11%. And it gave you 7% of fundamentals. Remember what the fundamental funds are funds that actually tend to put more weight in companies that have large cash flows, large book value to large value to capitalization, all that. And some people in the last 10 years, it didn't make any sense to have money there. But anyway, you have no choice. And over the last 100 years, it did make sense to put some more weight on value stocks. International developed 7%. International emerging markets like that. And small companies, 5%. Remember, they're more risky. Emerging markets, international. Anyway, it's kind of nice. They're not giving you that many fundamentals right now. Look at that. They only have 2 fundamental funds.
Mm-hmm.
Which is kind of nice because the reason why I'm doing fundamental funds is because the people who are actually smart, like for example, you read that book, A Random Walk Down the Street, one of the things they knock is they knock is the fundamental funds. So people like me, if they are comparing Betterman and they're comparing Wealthfront, and they see that Schwab has too much in fundamental funds, they say they're tricking me. So they have to lower that level. Does that make sense? And probably the reason you have so little in fundamental, because we put a 35-year investment, horizon. So you can just wait for capitalization, to do. But if I did that for 10 years, you'd probably put some more there, okay? Does that make sense?
Mm-hmm.
And anyway, then the fixed funds, they say, use inflation-protected bonds. Those are bonds that the government pays you, but they guarantee that if there's a 20% inflation, they're going to pay you 2% above inflation. And right now, they're not paying anything, but they're very secure. And U.S. investment grade corporate bonds, and this basically means they're bonds of companies like IBM, and they're not going to go broke. Okay, and they're going to have treasuries, which are very secure, but they're not inflation protected. U.S. securitized bonds. And securitized bonds is a different type of, are not bonds, they're bonds that have been actually made into derivatives. We don't need to do, they don't need to do that. They put 2%, which is good, because I don't like securitization is what led to the 2002, 8, they securitized mortgages and all that. They put, they got mortgages on a bunch of houses, put them together, sell them, they were stocks. So, there basically is a new level of derivatives that I don't trust. And then they have international market bonds. And notice that's pretty small because they don't trust markets. They don't trust the American market now, they're going broke. And it turns out that what I read about the world economy, this makes a lot of sense about where the risks are right now. Remember I told you, I do read about investments, but they are the level of international markets, macroeconomics, COVID, and all of that, sufficient not to make decisions, but to be able to have intelligent judgments about investment as a whole. Make sense? Okay, this is fundamentally the lecture, and now I'm ready for any kind of questions people might have.
It's a lot to process.
Yeah.
Well, you have the recording,
Yeah.
and fundamentally, you're going to do fine with this knowledge. If you kind of understand what I said roughly,
Yeah.
basically, here's the story. The bottom line, I'm going to go ahead and go into the bottom line. One more time.
I like that. Bottom line.
Well, the big deal I want to tell you, if you don't understand this, in some fashion, if you do these because Ramon said it, you're going to lose money. I am not an investment advisor. I am a teacher. Okay? I hope that you learn this to a level that you can be a responsible investor for your needs.
Right.
And if you're saying this because Ramon doing it, I fail as a teacher. Okay, anyway, let's go ahead and go over the bottom line again. Can people see the screen?
Yes.
Okay. Savings accounts and certificates, do it in Marcus. Okay?
Mm-hmm.
If you're going to invest in the market, do it through a Robo-Advisor and use Schwab, at least to the beginning. Okay?
Yep.
Get yourself a credit card, get a money link, so you can move money from your Marcus to your checking account, and so on, okay? I wonder who went away. Who went away?
Berto.
Okay, that guy. Let me wait for Christina for a minute.
Sounds like she's on a work call.
Question while waiting for her. When you say 6 months of saving of your salary, is that pre-tax?
Well, that's an old-fashioned thing. But what I recommend, they used to say 6 months if you have a job and all that, but now maybe the job, you have to talk this to your father.
Okay.
And you talk to your father carefully and kind of look at the scenarios, if you lose a job, it has a lot to do whether you can move it, you move with your family, how much money you need a certain amount of money that you can take out, okay?
Okay.
Yeah, usually they mean your net amount.
You may not want to take, you may not want to take money out of the market because it might be low and you don't want to sell in the low market. You need some money that you can count on.
Yep.
It depends on the person. The old rule of thumb is 6 months. But
Yeah,
don't believe me there. Talk to your father for a while about life and what can happen, what cannot happen, and figure out, how much money you need to have on hand,
Yeah. No, but overall, it's solid advice to have a reserve that you can tap into if something's cast.
You gotta buy a car. All of a sudden, you need to buy a house.
Yeah.
You're sick. You're something. You need some money. Okay.
Yep.
Of course, I didn't mention here. You need to be properly insured. Okay, you do need insurance here against. By the way, not all insurance. Insurance is about things you cannot afford. Really, you should have medical insurance. You should have auto insurance because you can kill somebody. Home insurance because you sold the house. But by all means, if you have to pay for, don't get dental insurance. Because you can, I mean, you can you don't want to make the company, I mean, normally dental insurance, the dentist normally charge the same amount of money to the dental insurance company than to you. And they're making some money somewhere. If you're a small thing, don't insure things that you can cost yourself.
Yep.
But anyway, should we wait for Christina for a minute? Do you have any questions?
I have another question. For my 401k, my company doesn't match me, but I do have a pension plan.
That's good.
Oh, well, that's good. If you still have a pension, that's really good.
Hey, if I do have a pension plan?
Well, it's fantastic actually, because more normally, most people don't have pension plans, but pension plans is a good thing. It's that the pension plans is that the company's taking the risk.
Yeah.
Okay, and if you have a pension, you're lucky. But normally, what they did is they got rid of pensions, and they put people in what's called 401ks and stuff like that.
Yep.
And UT had something, which was basically they contribute 10% of my money into something like this, like a 401k something. But that way, the person who takes the risk is you, not the company. So if you can, you should let the company, you take a convention plan, but then what you should do is the money you have to invest, put in an IRA right away. And any money you have extra, or IRA, if you can put money in the 401k, do that. If you have some money you want more liquid, put it in a taxable.
Okay.
Okay? Well, anyway, Christina can talk to you about the recommendations, okay, later, okay? So I'm going to share the screen again, okay? Okay, like I said, market for saving accounts and CDs. Make sure you have a saving account because that's the only way you can transfer. Invest in the markets through a Robo-Advisor. A good beginning is Schwab. Maybe later when you know a lot, you might decide to find somebody else. Get money links. Get a good credit card and pay your utilities and everything with it. You get 2% back. If you buy an Amazon, get yourself an Amazon card. Because Amazon gets give you 5% cash back as long as you spend in Amazon.
I didn't know that.
So I'm going to go ahead and put that there. And the big deal is, let me say Amazon card.
Hey guys, I have to go, but I will watch the remainder of the video later. Okay?
Okay, Chris.
All right. See you guys.
Bye.
Yeah, I'm going to finish right here pretty quickly. Get a cashback thing. Amazon will give you 1% of everything, but if you buy Amazon, 5%, okay?
Got it.
Autopay, because autopay over time is money. Because autopay, what it does, it takes you from your checking account the day before. And over a year, you have the money, if you have the money in Schwab or whatever, it's invested before you pay it, okay? And you never forget. So you can get all those companies to pay automatically from your checking account, okay? Does that make sense?
Mm-hmm.
Yep.
Don't buy a house in a crate and study. And you believe this, you are, tell you what I'll do. I'm going to give access to you people to this OneNote portfolio. So I'll be sending you a link and you can just go around and what I've been doing.
Sorry. I'm back.
Okay, that'll be great.
That would be wonderful. Thank you.
Okay, so I'm not going to give you access, but you can go around,
Wait,
some cost, whatever. You can go here and go around. Like I said, I offer you to give your course in which I go over all these things.
I don't know if you guys talked about it while I was on that work call. I'm so sorry. Did you recommend how you can calculate the amount that you should have for retirement? I know you said 16% you should save right now.
I say all time, but
How do you calculate that
in
number?
the old days, a good number is 16%.
For savings.
That's what people
For savings right now.
They have articles and they say 16%. Okay. Now
Yep.
you might be able to find a calculator. There's all kinds of calculators online, which Alberto used that created a scenario that said, well, when you want to retire, when you want to buy a house and all that, and they will tell you how much you should save. Okay.
Shouldn't maybe will that app Mint do that?
Who?
The app that you recommend in Mint, won't that do that?
I don't know because I have never used it.
Okay.
But what I will use Mint only for the purpose of seeing where my mother is and where your money is.
Right, but I would think they would have that feature.
I don't trust it completely.
Okay.
And they do have they do plug things, but there are plenty of things from TIA, Vanguard. There's plenty of calculators that allow you to do those things.
Yeah.
And I encourage you to go ahead and look at those on your own and, do with your father, whatever, look at, that would be a good thing to do with your father.
Yeah, that'd be fun.
And look at that because your father knows about what can happen and all that, okay? So that's a good thing to do with your father. And make sure you find ones that come from big companies like Schwab, DIA, and don't buy anything they tell you to buy. Go to a Robo-Advisor, but those calculators are pretty good. Okay? So I just haven't done that, but I do know those calculators are. And you go ahead and do that, and maybe one day you can tell me what you find out. If we meet again,
Okay.
one day I might tell you to go ahead and report on something.
Oh, good.
One day I might ask Steve to tell me, not now, because I want you to study. One time in the future, I want you to give me an overview of what Better Man does.
Ooh.
Why he likes it or hate it, and maybe whatever, maybe you want. I would enjoy, I'm an old man. An old man, nobody wants to talk to them. And especially one like me that have Asperger's. So if I have a young audience, I love it.
I enjoy it, and I enjoy it. So
Well, anyway, if you people want me to give you classes periodically, I will. So,
Sure.
I miss my teaching. But anyway, I can talk about all these things, behavioral finance is an important thing you should know. It's called about the people who go crazy buying Tesla and all kinds of stuff like that, go crazy. The people who bought tulips, tulips and all that, I can talk about those things, but all of these things cover at more depth in the book.
Yeah.
But anyway, I'm going to give you access to this, and you can go ahead and you can reach this in a website. In fact, I'm going to do that actually right now, and I'll tell you what you can do.
Thank you, Ramon.
Yep. Thank you.
Yeah, this is great. Thank you so much.
Yeah.
Well,
Appreciate it.
now you can see why. You know, I have Asperger's, and people who have Asperger's like me, we don't think, we compute.
Well,
Anyway,
you're doing some pretty good computing then.
Yeah, better than the rest of us. Sure.
well, I mean, at my age, I got a certificate in machine learning. So I know how to do algorithms like Amazon and all that, and I actually program on my own a recommender system. I mean, something that, you know how Facebook recognizes faces and all that?
Yeah.
Well, I did one that could distinguish between dogs and cars and birds. Show programming, and I took
That's
a
awesome.
sequence, four core sequence, 2 of them for credit, and 2 of them they raised 65 price. I didn't get credit for those. And I took a course. I mean, I got a fake degrees in psychology from the University of Penn State. So I'm still going around.
Love that.
All righty. Well, again, thank you.
Thank you so much.
I'm saying that you can go ahead and all of these things you can find. I'm going to give you a place like this where you can just go there and you will see this thing that I don't have to tell you about it, but you can just go around. You have that within the website. And how many of you use Windows? If you have Windows and you have Office 300, you have Office 365 on your computer, you will have the OneNote application.
Yep.
And you can go ahead and then, when I share this stuff, you don't have to go ahead and see it online. You can see it on your computer, which is much nicer, just like I show you.
Great.
Okay, this is the class. It was about an hour. 2 hours, 2 hours and 19 minutes. One thing you do learn, that you will never find a Cuban that is deaf mute. Talk and talk. Any other question? Talk. You'll never find an Argentinian that is modest. And
No.
you will never find a Cuban that is deaf mute. So anyway.
Great way to end. Love it.
Right now, the recording will be there later, and I'm going to share widely if you people don't mind.
Yeah.
Sure.
You don't mind you being seen, so.
Nope.
Okay, I can go ahead and actually stop sharing, and goodbye, and.
All righty.
Bye.
Thank
All right,
you
thank you,
again,
Ramon.
Ramon.
Thank you.
See you soon. Class number
Mira,
2.
Mommy's
Let me know if
asking
you
if
want a
we're gonna
class.
have to see.
Don't do it
the,
don't do it more than once a week.
Oh, no.
Maybe every 2 weeks, twice a month or something.
Okay.